In the last few hours, the investment community has been abuzz with one name, Circle. But why is Circle stock now detonating in search trends everywhere, and what does it signal for investors and the wider tech and crypto space? Let's dive deep into the sudden interest in Circle, the group behind the USDC stablecoin and a leading force in the developing Web3 world. First, let us know what Circle is. Circle is a worldwide fintech company best recognized as the issuer of USDC, which is a stablecoin tied to the US dollar. In contrast to cryptocurrencies like Bitcoin and Ethereum that are best characterized by their volatility, USDC is created to be stable in value, perfect for digital payments and decentralized finance. Circle's influence goes far beyond simply launching a stablecoin. The company has been constructing infrastructure for money's future, an ideal of currency flowing freely, instantly, and securely throughout the world. Its clientele features heavy hitters like Coinbase and BlackRock, and its tech has found its way into international payment platforms, DeFi protocols, and even government pilot programs. So what's behind Circle stock's sudden popularity? The first large reason, whispers of a possible IPO or public offering. For months, there has been talk that Circle would consider going public. If this becomes a reality, it would be one of the largest fintech IPOs in years. Investors like the idea of being able to purchase shares in a company that occupies the space where traditional finance meets the crypto future. The hype alone is enough to generate enormous online interest. Second, crypto market recovery. Over the past several weeks, cryptocurrencies such as Bitcoin and Ethereum have been on the rise again, driven by institutional demand, future Bitcoin having events, and increased regulatory clarity in certain areas. With increasing confidence in crypto comes increasing confidence in businesses such as Circle that enable the infrastructure for secure and regulated crypto transactions. Third, partnership announcements. There are rumors unconfirmed that Circle is forming new high-level partnerships with international banks and financial institutions. These moves would further legitimize USDC as a stable, scalable digital currency alternative for both retail and institutional investors. Fourth, increased government attention on stablecoins. With governments around the world considering central bank digital currencies, or CBDCs, the role of stablecoins has never been more central to policy discussions. Circle's compliance-first approach and transparency in asset backing puts it in a strong position compared to other stablecoin issuers. Now, let's discuss numbers. USDC has a circulating supply worth tens of billions of dollars today and is utilized in millions of daily transactions globally. In contrast to some stablecoins, USDC is 1:1 collateralized with cash and short-term US treasuries, so it's appealing to risk-averse users. But Circle is not all about USDC. The firm has been innovating in the background. Its programmable wallets, crypto-native APIs, and integrations with Web3 applications and dApps point to a firm thinking much deeper than stablecoins. It's creating the foundations for a decentralized internet economy. But everything is not risk-free. Regulatory uncertainty continues to hang over, particularly in the United States. Although Circle has taken steps to comply with all applicable laws and is transparent in audits, the wider crypto regulatory landscape is a moving target. Also, competition is intensifying. PayPal has introduced its own stablecoin, PYUSD, and other players such as Tether continue to control significant segments of the stablecoin market. Circle must keep innovating consistently in order to hold its market share and reputation. And then there's volatility of public opinion. Crypto and fintech stocks have a tendency to surf waves of hype and fear, and in the absence of a good IPO announcement, this recent spurt of interest may prove to be fleeting. But still, Circle's stance is distinctive. It is regarded by many as the safe bet in a risky industry, mashing up tech innovation with financial prudence. If it floats, the appetite for Circle shares could be enormous, particularly from younger investors who are more crypto native. This is also part of a larger trend, the mainstreaming of digital finance. The more that people hear about stablecoins, digital wallets, and blockchain-based banking, the more companies like Circle aren't merely surfing the wave, they're creating the surfboards. In short, the sudden burst of interest in Circle stock isn't coincidental. It's a symptom of greater tides of upheaval in the financial sector, from old-school banks to shift toward cryptocurrencies, to individual investors pursuing the next great disruptor. Circle is at the forefront of this. Whether you're a crypto nativist, a fintech speculator, or just a passive observer of the making of the future of money, this is a company worth keeping an eye on. Because although today it could just be trendy stock news, tomorrow it could be one of the building blocks of world finance.